Nobody is trusting this Bitcoin rally. We are almost at 41K. And when chatting with people in the Telegram groups, I hear short positioning. Members in the public Telegram channel, link down below by the way, are betting on falling prices now. And it's true, if you wanted to find reasons to bet on falling prices, you could. For example, you could look at the weekly RSI and say, hey, we are pretty high here. Or you could look at the Bollinger Bands and say, again, we are overshooting here. Isn't this time to take profit? You could also draw resistance lines where we have bounced off several times in the past. Or here, look at this, Bitcoin measured in Ethereum, also comparatively high. From the way I talk about this, you might see that I disagree with a bearish outlook. I do not have a crystal ball either. I don't know if the price goes up or down or sideways or in circles. I have no idea where Bitcoin will go. But I think it's important to go about this systematically. You don't want to get guided by the emotions of the moment. You want to use back-tested strategies that at least historically worked well in the past. What we see over here is Bitcoin with two moving averages. The red moving average is exponential. The line in turquoise is a simple moving average. Now those moving averages do not have a random duration of like 100 days or 200 days. They are very specifically chosen based on the past of Bitcoin's price performance. They are based on this chart over here. I've made simulations of buying and selling Bitcoin. Whenever the price is above the moving average, we bet on rising prices. Whenever the price is below the moving average, we bet on falling prices. And we want to know what's historically the best moving average. So the data reaches back to 2017, and I've run the numbers both for the simple and exponential moving average, starting from the 2 days all the way to the 200-day simple and exponential moving average. We also have trading fees in here, 0.2% for every trade. And we can look at the results here in chart form. On the x-axis, we've got the duration of the moving average. On the y-axis, we've got the annualized performance. In black is the performance of buying and holding Bitcoin over the time frame. Note how pretty much any moving average strategy outperforms just buying and holding. Crypto is very, very cyclical. Crypto runs in trends. When prices tend to go up, you want to continue betting on rising prices and vice versa. Only if you go very short on the duration, then it's the trading fees that eat you up. So here is the 124-day simple moving average, and here is the 71-day exponential moving average. So historically, this is how that looked like. In white, we've got the Bitcoin price, barely visible, and in turquoise, we've got the back-tested returns. This is a linear scale, but we can also look at this on a logarithmic scale, a very nice constant outperformance despite the bear market. Right? We bet on falling prices whenever the price is below the moving average. That's the SMA, the simple moving average. Here's the EMA, the exponential one, of course, also outperforms buying and holding. And that's then those moving averages on the chart. Now, do you see the difference here between approaches like this, simply taking a random RSI, a random Bollinger Band, or drawing random lines? Do you see the difference between this and this? This historically worked. And it worked even well if we move around the durations a little bit. Following the trend in crypto makes a lot of sense. And currently we are bullish. And we'd even be bullish if we fell all the way down to $30,400. Only once we close a day below this will we turn completely bearish. Things look very, very healthy. I'm not saying it can't correct. I'm not saying it always goes straight up from here, but still. Betting on falling prices when crypto in general is a pro-cyclical market is incredibly dangerous. Do you really want to position yourself in the exact opposite way to whatever that strategy performed? I'd be careful at least. Now there's a lot of other reasons to be bullish, right? Traditional finance is betting on rising prices. Wallets of any size are currently accumulating, not just retail, but also the mega whales. There are arguments for both sides, of course, otherwise prices wouldn't fluctuate. But still, whatever approach you use, try to at least test it, try to verify it, try to poke some holes at it, don't just randomly guess. Because unfortunately, our intuition is more often than not wrong. We are very hyped about the market when things go up. We're very depressed, don't even look at the prices when things go down, and you should do the exact opposite, right? You should buy when things go down, you should sell when things go up, but you need to trade the trends. You have to sell when the appreciation slows down. You have to buy when the depreciation slows down. And simply the price jumps above the moving average, that's when you want to buy. And the price goes below the moving average, that's when you want to sell. And for Bitcoin, the 124-day simple moving average is the best. I've not only backtested Bitcoin, I've backtested all kinds of altcoins. That's all on the premium membership website. Premium also includes a Telegram channel that sends a message whenever a moving average gets crossed for your favorite altcoin. In case your altcoin is not in there, simply send me a message in Telegram within Premium and I will add your asset as well. I will backtest your asset as well. So feel free to check it out. It's thebitcoinstrategy.com. Link is down below.